Let's go to Jonathan Sheridan from FIIG Securities for a bit of analysis here. Give us a view on maybe the jobs side of things, because we were wondering whether the Reserve Bank might have been expecting the latest jobs numbers which came out, which had a 6 in front. Do you think the minutes give us any further information or further insights into their thinking?
I think the minutes are broadly reflective of what they said in their statement of monetary policy that was released recently as well. I'm not expecting any great change from one release to the other. I think it just is again showing that it's a difficult balancing act for the RBA. They've got, on the one hand, they've got rising inflation, which is coming from a lower currency, but they want the lower currency to make manufacturing more effective. So it's a difficult balancing act, as I said.
As well, what were your impressions on that playing down of the hot inflation print we got in the last quarter, as if to say, is that code for saying, look, we need to see another quarter to satisfy ourselves that wasn't just, an exception rather than the rule?
I think that's right. Inflation is something that affects people's purchasing power over the long term, so a single quarter spike can be explained away. We're seeing, to be frank, other spikes in data, for example, the weather conditions in the US affecting things there. So let's just wait and see what the next quarter and perhaps the one after that says about the annual inflation rate, rather than just waiting on a particular quarter's numbers. And I think the Reserve Bank tend to look through those spikes as well, and they look to see trends rather than just individual quarters' data.
Any concerns from your side of the divide as to this remark that it's possible from the RBA's perspective that household consumption could outpace income thanks to house and equity price rises? What would be the implication of that if household consumption began to outpace income based on gains in house and equity prices?
I think that's what drove the global financial crisis to some extent, is that people were willing to borrow, not to invest in assets that produced returns, but more for consumption. Consumption domestically is obviously something that's important to the RBA, as they want to get the non-mining sectors of the economy firing again. But clearly it will be concerning if people start essentially borrowing against that equity that they've built up over the last couple of years, and then essentially spending it on things that don't produce a bit of growth on the other side.
Is that a thinly veiled warning to banks? Can you read that much into it to say, look, tighten ever more, remain ever vigilant when it comes to your lending standards?
Yeah, that's right. I think for banks, the maintenance, particularly in Australia, the maintenance of rigid credit standards is important. There's nothing worse in the loan business than a bad debt. So it's important for the banks to maintain those lending standards. Of course, again, on the other side of the balancing act is that the banks themselves want to see credit growth, because that's really what drives their results. So again, a balancing act, but I think our banks are actually very, very good at maintaining that balance.
Can we switch stories a little bit and talk to you about Qantas, because more and more reports every day that they're likely to get a government guarantee of their debt. Do you think that would actually make would it make a difference to Qantas and the future of Qantas?
Yeah, the real world difference it will make is immediately lower the cost of them borrowing money, and then they'll go to the markets and borrow that money at a much lower rate. So they'll obviously be able to use those funds to protect the business they have and grow their business with a cheaper cost of funding. So,
but the ratings agencies themselves have been fairly sceptical about how Qantas looks, haven't they?
Yeah, that's right. And when they made when they flagged their result coming out next week as being a large profit downgrade, obviously the ratings agencies took a dim view and downgraded their credit rating from investment grade into junk, I guess. And the effect of that was to raise their cost of borrowing substantially. So the government guarantee will negate that if it comes into place and make it cheaper for them to borrow money. So that's a positive for Qantas business.
Mark Bailey from Equasia this morning's flagged an idea that the government actually, kind of on a similar note, might want to start charging the banks for the government guarantee of deposits of up to $250,000. There's pressure on the budget. Do you think that could be an easy target?
Yeah, look, I mean, that's what the government did for the banks during the GFC, is charge them a fee for guaranteeing their deposits. It's entirely possible that they will do that with Qantas. I don't think that's terribly likely. I mean, the Abbott government has already flagged that, they're not willing to just throw cash at Australian businesses that happen to be suffering. I think, given that history, that they're not really keen on just throwing money at businesses, then the amendment to the Qantas Sale Act is a better solution, if you like, for the government, because it doesn't involve taxpayers' dollars. That being said, of course, how the opposition reacts to the amendment of that act is anyone's guess, I guess, at the moment, and they've said that they're not really in favour. So difficult times to get that legislation passed, but I think that will be the preferable alternative.
From a ratings perspective, though, if the outlook as it was negative based on structural concerns about the aviation industry, would you believe that a part asset sale, say a frequent flyer, would still be a requirement, almost a condition precedent to the government's? In other words, just to put a line under the balance sheet to square off some of these losses.
Yeah, that's a possibility. I mean, the obvious problem with asset sales, and particularly that frequent flyer business, is that that's one of the big profit centres in Qantas. So yes,
I mean, you can tell me. I'm not suggesting you give away majority ownership. We're talking here of maybe a mooted 30% sale.
Yep. I think it's an option. I think Alan Joyce is probably looking at all options. I'm not sure that he would take very kindly to a demand from the government that he sell off some of his assets, and that's, I guess, down to his skill as a negotiator in terms of his position vis-a-vis the government.
Yeah. Thanks for joining us, as always. Appreciate it, Jonathan.
Thank you very much.
Jonathan Sheridan from FIIG.